James Hughes, Chief Market Analyst here at Scope Markets, and this is your daily briefing. Shares on Wall Street surged during Monday's session after drug company Moderna reported positive data on early-stage coronavirus vaccine trials. Stocks in Europe and Asia followed suit, and futures markets are pointing to a strong open in Europe on Tuesday. Elsewhere, Chinese President Xi Jinping said that his country will provide $2 billion over the next 2 years to help other countries fight the impact of the pandemic. This came just hours after US President Donald Trump threatened to completely withdraw all funding from the World Health Organization if they could not show a significant improvement and prove its independence from China. This comes as Trump continues to be slammed for his handling of the crisis, as yesterday he announced he was taking anti-malaria drugs to stop him contracting COVID-19, even though it is completely unproven to have any effect at all. Trump remains under pressure with his handling of the pandemic, and it becomes the biggest threat to his re-election campaign. His plan over recent months to combat that is to focus on China. Early on Tuesday, UK unemployment data was released for March, showing that the overall unemployment rate did not actually increase as much as has been expected. The rate came in at 3.9%, which is lower than the 4.4% that had been expected. However, it must be stressed that these numbers are for March, which for the UK only saw lockdown begin on the 23rd of the month. Oil markets seem like they have spared negative prices for this month. Yesterday saw the June futures contract, which expires today, Tuesday, jump higher, with prices in general hitting a 2-month high with over $32 per barrel. The easing of lockdown has seen a slight pickup in demand. However, it has been the output cuts that have had the biggest effect. Back in April, OPEC Plus members agreed production cuts, but the likes of Saudi Arabia have cut a lot more than they were originally asked to. Inventory data started to show evidence of recovering oil demand last week, as inventory data reported a decline in inventories of around 700,000 barrels, the first drop in this number in 16 weeks. The fact that lockdown seems to have been eased in many countries without a substantial increase of infection rates has also helped the prospect that lockdown measures can be eased further, meaning demand can pick up that little bit more. However, we must be cautious over the current movement in prices. Demand may be improving, but the reaction of prices is very dramatic and knee-jerk, which may well not be sustained over the medium term.